We're in an exclusive conversation with Mr. Rahul Khosla, the president of the Max Group. Thanks so much for joining us here in ET Now. Look at your stock price. It's down 40% this year, down from the highs of 600 rupees. Why is that the case?
See, hi, anyway, Nayantara. I think there is a big difference between prices being driven by sentiment, which I think is what's happening. Obviously, the market is spooked by a lot of macros. Many developments have happened.
Versus no, but your stock was spooked before the INFS scare.
It was not just IFS. I think ILFS, there was also a lot of macros around oil prices, around inflation, around a whole bunch of things, questions around management changes in partner banks and so on and so forth. But if you go and turn and look at the fundamentals of the business, which I think eventually the intrinsic value of stocks will always come back, as it always has in the past. And I think what I would like to do is talk to you a little bit about why we believe that the fundamentals of the business, both health indicators and performance indicators, are actually in a very good state. So if you allow me, I'll just explain to you what I mean. So if you look at some of the health indicators, our conservation ratio is 90%, okay, which means the customer stickiness. Our 61st month persistency is 54%, which is the top in the entire private health life insurance space. Embedded value has grown more than 20%. Our return on embedded value...
Sorry, I would interrupt you there. When you say embedded value, I've done a little bit of math over here. HDFC Life is trading at 4.9 times its embedded value, while yours is 1.9 times.
That's the multiple. And that's what I'm trying to say is that actually there is no reason why the gap between 1.9 and whatever 3 or 4 times multiple there is. Because when you look back at the fundamentals of the business and you compare across the industry, when you look at the performance that I'm just trying to explain, we said about 6 months ago that we would do a 20% growth, 20% ROEV, which is return on embedded value, and 20% new business margins in 3 years. We've achieved that in year 1.
Well, you've achieved that in year 1.
Yes. Now we are aspiring for 25, 25, 25 on all 3. Let me just give you some growth numbers.
No, but let me just first talk about the market's concerns.
No.
Allow me, Mr. Khosla, I'll tell you why. The market is also concerned that the person who led you to this kind of growth and built this business was Mr. Rajesh Sood, who is now leaving the company. You have promoted someone in-house, someone who was involved in the front. But there are concerns about the future of the management at Max Financial, and one of the reasons analysts believe why you've been punished by the markets as well. How would you address this market concern, because the person who drove this company has left?
Okay, so first of all, one individual does not drive the company. I am very proud to say that the team that has supported Rajesh, including shareholders and his team, are very strong. That's been actually one of the hallmarks of the team. Look around yourself. HDFC Life, internal succession. ICICI Prudential, internal succession. We have also done an internal succession, and 2 people who are MD and DMD together have almost 3 decades of experience in the company, not just life insurance.
Okay.
The team itself is extremely strong, which is supporting them. So from my perspective, the fundamentals of the business are not just because one person has done it, or I have done it, or he has done it. Secondly, there's no fractiousness with respect to this, parting. I think renewal is also required, by the company, by himself. 18 years, has been fantastic. So no one is denying that it's been a great run. But I think moving forward, to my mind, I think the inherent strength of the company and the strength of the team is going to carry this forward.
I have to ask you this question, and it has been an overhang. Is the deal with HDFC Life over?
Yes.
Is it done and dusted? No question of that coming back?
No, there's nothing on the table either with that or anything else at the moment. We walked away from IDFC last year because we just felt that the conditions were not correct for us to commit to that kind of value, but nothing else is on the table at the moment.
You've had a great relationship.
I will say that for us, a distribution-led opportunity anytime would be something that we would obviously scout for, because that would be the strategic reason why we would do something.
Is there anything on the table right now? No. So let me ask you another question in a different way. You have a great relationship with Mr. Amitabh Chaudhary.
Yes.
He's now going to Axis.
Yes.
Max Financial has a great relationship with Axis. There's a bank assurance agreement.
Yeah.
Would the markets be wrong in doing 1 + 1 = 3 and a bigger deal with Axis?
Hey, all blessings to the market if good things happen. Look, first of all, let me just say, Amitabh is a very smart guy, very, very smart, very intelligent, very rational. He's going to do exactly what is right for Axis. Let me also tell you, our growth year to date with Axis has been 24%. And that's not small relative to the market. We have probably the gold standard in bancassurance relationship with them for the last 10 years. So this is a very valuable relationship for both parties. I'm very confident that in whatever form, whether it is continuation of this relationship in the form of bancassurance, anything else,
but could it be more? Could it be more than bancassurance?
We'll see. We'll let him join. We'll have a nice conversation around what's possible. And look, at that point, the rationality of it will come out, because we know the rhythm of Axis backwards. They know our rhythm backwards for the last 10 years. And you look around, benchmark it with bancassurance performance anywhere else, you'll find that this is pretty much the gold standard. So all value that needs to be a decade or two can be done together quite well, in whichever form it takes place.
So I have to read between the lines. That's my job as a journalist. You're not ruling out a bigger transaction with Axis, whether it's a merger or strengthening the bancassurance.
In this market, you can't rule anything out. The fact of the matter is that at the moment, I think it's premature to start talking about transactions when Amitabh hasn't even joined. So I feel that, give it a little time. We will, obviously be in discussions. And our next renewal, by the way, is 2021. This is not happening tomorrow morning. So we've got a good run left, even in this particular partnership as it stands today. And it's always succeeded over the last 10 years, so there's no reason why it won't continue.
So the big message that I'm getting from you, and correct me if I'm wrong, is that this message you're sending is that business is strong, the fundamentals are strong, that maybe you have been punished because of what's happening with your partners. For example, what happened at Axis and Shikhar Sharma?
I don't think so. See, I think a lot of people today in the market is very spooked by a lot of macros, like I said, right? Whether it is expectations of inflation, or it is partner issues, or like you said, it is management. I think people are trying to find reasons where, by the way, the fundamental intrinsic value is often forgotten in these times. Now, you will also go back and do some sort of retrofitting, and you'll find that most stocks which have strong intrinsic value usually come back to that intrinsic value, and that discovery will happen. Now, I'll tell you, if I was you, and you would ask me, hey, what else can you do with respect to management performance? The answer is look at what they've already done, which is right top quartile. The multiple that we are getting relative to the market, I believe very strongly for the reasons that I mentioned to you. That gap will close eventually because logic and rationale will set in. Sentiments eventually do create turbulence for a while, but eventually businesses go back to what is rational, and that's where we are.
Mr. Khosla, we're running out of time, so I'm going to make this the final question. You have given a guidance of a 25% margin. I know I interrupted you earlier.
That's okay.
How are you going to achieve that?
So look, that's important because I think a combination of 3 or 4 things. One is our protection business has grown really well. Okay, 38% growth year to date. And we want to make it from 8% contributor to an 11-12% contributor in our overall scheme of things. That's first. Secondly, our agency is, by the way, unlike several others, almost equally profitable as bancassurance because we stress on protection business. Thirdly, our digital business has been spectacular. It's been growing at what, 67-70%. So when you put all this together, our margins are going to be far higher than they have been because of these reasons. And overall growth, whether through bancassurance or from agency, and by the way, we're even looking at, we've already opened 60 new offices for agency. We will open another 150, and we are in dialogue, by the way, even with our erstwhile partners. New York Life, that discussion is on. How could we refresh agency? How could we make it more productive? How could we make it more profitable? So all of these things are going to go towards increasing margin and volumes.
Mr. Khosla, with that, we're going to wish you all the very best.
Thank
and thanks
you.
so much for giving this
Buy the stock.
interview.
Buy the stock.
I don't buy stocks. But that is back to you guys in the studio.
Thank you.